Welcome to this video on price action part 2 using multiple time frames. There was a part 1, and if you didn't see that one first, no problem. Go ahead and just finish out this video, and then you can go back and look at part 1. It doesn't matter which order you look at them. In part 1, I'll put a link in the description below so you can find part 1. All right, so now this one, the issue is that, hey, how do we know when a market is going to stop moving and stop going up? What are some different ways that we can look at that? So today I'm going to just show you one. So here we're looking at a 2-minute chart of the NQ, but again, this is a universal price action method that can be used for any market, any time frame. So those are really not consequential in this particular instance. All right, sometimes it is, but in this particular situation, it's not. So let me share this with you. As we come up, we've got a nice wave 1, 2, 3, 4, 5, 6, 7, 8, 9. Okay, now after 9, it stops going up. All right, so you can see that. Bada bing, bada boom. Okay, so there you go. And you can see that from here, it just kind of goes sideways. So would we want to be in anymore? Probably not, because, I mean, actually that lasts for over an hour and a half, actually. And no, really not much action there. So, but we had a nice run. So the question, of course, then is, and I get this a lot. I get a lot of people asking, you know, when do I get in? But just as important is, when do you get out? When do we get out? So this particular situation, the technique I'm going to share with you today is about looking at multiple time frames for a high probability of when the market will not continue. So the first thing that I'll say is, just on this time frame alone, the fact that we are in a wave 9 means that we are in an extended trend. So we've always got that, first of all, right? Is they say the trend is your friend until the end. They're absolutely correct. And what that really means, I find that a lot of people actually interpret that as just simply to mean trade in the direction of the trend. But that's not really the core teaching of that saying. It's a timing issue. And if you think about it, if the trend is your friend until the end, then that means at the end it's our enemy, or at the very least, not our friend anymore. So we don't want to be in anymore, right? So this would be our first indication just on this time frame. 9 waves. The way that I count, I'm not going to go over it here. I did another video on how I count waves, by the way. But this is my own wave counting technique. It's not Elliott waves. That's why we get more than 5. We get 9 in this particular case. So that indicates an extended trend. The average trend, the way that I measure trends, is 5 waves. So same as Elliott, except Elliott wave, they always move the wave counts around if it goes beyond their first count. And they impose an artificial structure of 5 waves. So it always is 5. I don't do that because, hey, some trends last longer than others. Why not acknowledge that in our notation? So I do. And in fact, then that helps me to know, are we in an extended trend where the trend is no longer our friend? That's a matter of probabilities. Could it go up and do 9 waves? Yeah, I've seen it, but it's the exception to the rule. And we've got to trade the rule, not the exception, because we're trading probabilities. So I'd rather take my money off and not leave it in a low probability scenario, and rather move that money now into an early high probability situation. But how would we determine this? Okay, so let's go to the multiple time frame technique. And even though we've got that, because, by the way, also here's the other deal. This thing did continue past 5 waves, right? 5 waves occurs right here at around 10 o'clock or so. But it'd be nice to stay in longer, right? It'd be nice to have a way of staying in longer. And it keeps going until after 11 o'clock. Okay, so let's bring up the higher time frame and look at that. Again, remember, this is a 2-minute chart, and I'm going to bring up a 6-minute chart now. So here's our 6-minute chart. And again, here's our time, starting from around 9 to around 11. So here's the deal. It goes a little bit, it does make another little impulse move up right after that. But this whole time, we don't get any waves. Just straight up. And then that is our first wave low, 1 and 2. Okay, so big move up and without any significant retraces. So from there to there, that's 1. All right, now there's a rule here that has to do with the energy of price action in the market. This is a top dog trading rule. That when we get a very steep angle that is all just one half cycle, that's a half cycle, from this low to that high. There's no cycle lows in between, right? You don't see any twos. It's just one. That's your first cycle low in a new uptrend. So the rule is this. When you get that type of very aggressive, very fast, very dramatic impulse move, the first retrace in the trend, which normally would be a very high probability trade because it would be early in a new trend, technically, first retrace in a new trend, this now becomes a very, 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 very low probability trade. And so the reason for that is because, well, it's already moved so much. And so the mass psychology of it is people feel like, well, gosh, it's already moved so much. I'm late to the party. And guess what? They're right. They're late to the party. And so therefore, very little buying will come in there. People are not motivated to come in and buy at such a big move. After that, they feel like they already have, missed the boat. So, and again, they are correct. So on our short-term time frame, this comes in right at that wave 7, 9, 11, all that kind of stuff. It would. So this is where we would say, okay, if I'm trading that shorter term time frame, actually let me bring them up. I think it's easier to see it side by side. Yeah, this is definitely better. So now I've got my global crosshairs on there. So right here, boom, you can see the global crosshairs across both vertical lines concurrently. So this is our first retrace in the trend there. It comes after wave 9. And sure enough, market just doesn't really go anywhere after that, does it? Just kind of goes sideways. No bueno. No bueno. So if I was in long based on the short-term chart, and again, one of the ways that I could stay in here, let me switch the chart over there. One of the ways I could stay in longer than 5 waves, which happens here at around 9, almost about 10 o'clock, is to go over to the other chart, bring that puppy up, there we go, and see we're only in, boom, there's 9 o'clock. Let me bring these over a little bit better for you. There we go, nothing like being prepared. Okay, so there we go. So there we go. Now there's my wave 5 right there. That's where I normally get out. But again, there's no wave low here on the short term. Just keeps going, right? Such an aggressive move on that longer term chart, on the 6-minute chart on the left. And that would encourage me to go ahead and stay in. So different perspectives. But then when we get up to here, it's like, okay, well, that's the top dog trading rule after a very aggressive, almost parabolic move up on the long-term chart. For cycle low, and that is not going to be a high probability continuation trade. Therefore, hey, if I'm in based on the short-term chart, then might as well just lock on some profits because, hey, we made some nice money already. Why hang around for, let's not get greedy. And it wouldn't pay to get greedy anyway. High probability trades, that's all we want. Can't find certainty, so we only trade high probability. So if you find this video helpful, feel free to rate some comments. If you have any questions about this, also feel free to type them in the comments below. Give it a nice thumbs up and share it. That's the best thing you really can do. Best compliment you can give me. Best way you can keep me encouraged to do free tutorials for you like this, which I really enjoy. And it helps other people. Share good things with good people. Also, I have another trade setup that is going to be more detailed. I only have like 10 minutes on these YouTube videos. I try to keep them short and sweet. But I have a longer lesson that I actually give you my rubber band trade on. Now, that includes everything. The entries, the exits, all the rules, all the filters, everything. So you can take that trade and start trading it right away. Trade it on a demo or a simulator account first. Obviously, do not risk real money on anything new that you learn. But this rubber band trade is a trade I still take pretty much every day. And every time I see it, I definitely take it. So I want to give you real value, give that to you absolutely free. Just click on the little icon there, the little image in the top right-hand corner of this video, and that'll send you to a page where you can request that, and I'll be happy to give that to you absolutely free.